Hello everybody, this is Carlos Diaz from ForexSideEffects.com with a live training video, an open video for everybody to understand and learn about price action. In today's video, we're going to be talking about price action just for the fact that it's extremely powerful, yet not very well understood by many traders out there. Many people tend to overcomplicate things when actually you have a powerful, simple strategy using good old-fashioned price action activity to dictate a lot of information that you can use and improve your trading in combination with whatever strategy that you actually have. So let's just get right into it, and let me try to help you make it as simple as possible, yet powerful enough you can start implementing it today. All right, today we have a Australian dollar chart. This is a 4-hour chart. And what I'm going to be doing right here, I'm going to stick to the 4-hour chart just for the fact of make it simple for you to understand. I'm going to show you exactly what to analyze using price action in terms of right now, and then I'm going to go back a little bit on time and see how price action told us where to get in and profit from this trend in 4-hour chart. As a matter of fact, this is one of the charts that I personally use for our time frame because I'm a little bit more into a position trader where I run my trades for a couple of days, and this has been a very profitable one. So let's just dive right into it. Now, the first thing that you need to understand is that in terms of analyzing every chart, my point of view is that I use my charts from right to left. I analyze my charts in reversal mode. I need to see where they are and then see what the heck happened before, so I can just take the most prevailing analysis or market behavior and try to predict what the possibilities of the next possible moves are. So the first thing is to read the chart from right to left. Second thing is identify the major trend. It is obvious and simple to see that the market is going up in this case, but I need to double confirm this with price action. How do we do that? Well, it's a very straightforward, simple way of identifying key support and resistance. All right, and then just interconnect those previous highs and lows, the most important highs and lows, in order for us to identify the price action. So what I did right now, I label here the highs and the lows, starting from this level, high, this low, this high, and this low, okay? One of the benefits, key benefits of identifying highs and lows is that you can go back in time and see if those levels has produced some sort of importance into the market. So if I go back in time, I can certainly see here that this low right here, this support turned into resistance right in there. This support, has worked out as a support again in this level, so on and so forth. All right, so those are the big strategy that many people use on support and resistance. But I found that a little bit more not too reliable, although they work, and I use them every day as a confirmation of my analysis. Let me illustrate what I'm talking about. So let's just eliminate all this. And now let's just use it in a different way. What I'll do is I interconnect the most prevailing points based on my visual representation. So I can certainly see the market going up, down and up, and I'm interconnecting the most prevailing, more important, more obvious to my eye swing highs and swing lows. So let's just analyze the market from this point. I know that the market made the highest high, which is the most important high right now, and in terms of understanding, by just watching the charts, I can see that the market is in a bull trend, and I will not consider any buy opportunity unless this high is taking up, and I'll show you and illustrate that in a moment. So they're coming from this low, and this low is coming from this high, and this high, it's coming from this prevailing low. So as you can see, it's more of a swing high, swing low, and swing high. And now, most recently, they just made this swing low. So as we can see, prices has been creating higher lows in a consistent basis, understanding that the market is contained into an upward movement. Now, check this out. What people don't kind of forget about using this is that every single swing high and swing low represents a very important aspect of price action activity, meaning which one is important and which one isn't. So in this case, as I talked to you about, I'm on a bull market, and this is a very important high. For me to consider into a bull trend, the basics, because obviously there is a more, there's more into it than this basic level. But the basic of all this is to sustain yourself as a bull trader and consider a long position once prices pierce and close above the high of the that they have done so far. Remember, this is a 4-hour chart, so this is the highest as they went. So I will consider a position if they break that high and continue on. So how can we validate that? Well, I can validate because this is coming from this low, which has turned into the most important low. Why? Why would this turn into the most important low? We'll get back into this in a moment. So let me just eliminate this, so it doesn't confuse, one step at a time. And I'm saying this is a low that is coming from this high that it came from this low. So here's how you move on the important levels of highs and lows as the market moves on. Starting from the lowest point, I know that the market just made that low. It turns into the most important low. So I was assuming the prices should continue breaking through this floor and continue down. Where would that change? Well, that would change as the prices continue on to the upper side and then start a retracement, meaning market went up and they should have continued on into taking this low and that pattern, so it continued the the flow of the market to the downside. We notice as the market failed to take the most important low here and move on to the upper side. What's going to happen is, since they make this high and came back down and failed to take this low, it's important to understand that they just left a pivot high. And I will mark that high as an important point where prices never went above it. They try to take it for a second time here. They fail to take it. So it is telling me, hey, there's some kind of importance of that high. So let me just draw a horizontal line, because if they break above it, it means that the downward move is about to change, just for the fact that they should have continued to the downside, taking the most important low, which is the lowest low. But if we break above it, then it means that this guy has confirmed a reversal point, and this pivot low will immediately translate into the most important low. All right? Why? Because it's coming from this high, that it was a major resistance point that they should have left behind, and they would have continued down. But since they pierce it, this movement comes from the most important low, which is the low that they never went. They wanted to go any further beyond this point. So this turns into the most important low. So as the market moves and keeps doing swings high and swings low, depending on which high they pierce or penetrate above, they will leave behind the most important pivot low or pivot high. In this case, this was the important low. Market went up. They should have continued to the downside. They failed to do it, and they pierced the high that they left behind, canceling this one as the important and translating it into this low right here. And the market should continue to the upside. And as you might have guessed already, this is the most important important low. And the market is coming down. But the tendency and the trend of the market, it's still bullish until this low is penetrated. So right now, what we have in terms of, we are bullish on Australian dollar, and we're waiting for this high to be penetrated for us to consider a buy or a long position. And this is how the basics of market flow is identified for confirming a trend of the market. So let's just go back a little bit on time and see what's going on in here, as you can see. So the first thing that I identify, I'm going to do the same thing, and I'm going to start plotting most important highs and lows. I'm talking about the swings. And why would I take this and not this one? That's going to be a very, very good question. Well, the reason being is because this guy comes from this low, right? But this low, if I go back and place, this is the most important low. In order for me to consider this an important pivot low, I should have seen it close below the prior low that they did. It didn't happen. Meaning that the most prevailing important low is still this one, and it's coming after this one. The market went high and come back down. So this is the most important high right now. All right. So as a reason, I'm just shooting my draw my line up to this point. Same thing happens here. The market's coming from this high, but this low is not valid because prior to this one is the most important low right here, and this one did not pierce it. It was right in here that they pierced it. So it's coming from this high, technically. Okay. And this is how it looks. So now if we concentrate on what is the most important high and low, I know this is the most important high so far. Let's just mark that. And it's just went down here, and you can see right in here, this low was penetrated in here, translated this into the most important high. The market peers back up, right? Now this is the most important low because this one, was broken. So this is the most important low. So now we have the most important high, most important low. Market should continue to the downside and break this level, and that would be our cue to short this market. And when that happens, this will lose validity and we will move into the most previous high or pivot high. That would be that one. And that happened here. And take a look at that trade. That was a nice sell-off right there. Once the market starts coming back up, this is not important anymore, obviously. So this low translating to the most important one. This is still valid though. And this is the more important one. Of course, you would have said, hey, but it's impossible for the market to shoot up and close above that. Well, that's the way that it is. As you can see, the market pierced through this level, but failed to close below it. But they immediately in the next bar, they closed below it. So right now we can see that this turns into the most important low right there. And as you have guessed it, this lose validity and move into the next level of importance, this high. Now we have the most important high, most important low, right? Because it was pierced over here. So we need to see a break either up or down this level to identify the trend. But the trend, meanwhile, still down. So the prices go up, comes down. But as you can see, they did not take the previous low. It was until here that the market actually closed above that high, identifying a potential reversal point. So here's the key. This is a potential reversal point. The market behavior is just telling us, hey, we're probably changing trends. Let's see what happens. But they just left a more important high right there, right? So we're going to mark that as the most important high. And now we need to wait for the market to come down and take this low. Probably it will cancel our potential reversal to the upside. But so far, once again, this was the high. They closed above it. So far, the tendency now is don't trade because we are probably reversing. It's not until they take this high or take this low so we can just confirm a trend. So there's no trend confirmation right now. Let's see what happened. The market came down, failed to take the low, but there has not pierced through this level. And long and behold, here comes a buy, eliminating the importance of this low, translating it to this one, and the market should go up, and this is a cue to go long, and the market indeed went long. And as you can see, the market provided a very nice hefty profit. So this is the basics of price action activity, learning to use it correctly and wisely and dynamically in order for you to understand what the most important and prevailing trend it is. This is Carlos Diaz from Forex, and I'll see you on the next trading video.